The second part of Lecture Series 23 of Bite-Sized Corporate Reporting on IFRS 2, Share-Based Payment, explores further the recognition principles of equity-settled share-based payment, starting with the definition of vesting period and vesting conditions. The vesting period is the period between the grant date and the vesting date. Vesting conditions could be either service condition requiring employees to complete a period of service or performance condition or both. Performance conditions fall into two categories, that is either market conditions or non-market conditions. IFRS 2 defines market condition as one related to the market price of an entity's equity instrument. As market conditions have been factored in determining the fair value of the equity instrument, an expense should be recognized irrespective of whether the conditions are satisfied. Non-market conditions are conditions not related to the market price of an entity's equity instrument, such as profit targets, and should be accounted in determining whether an expense should be recognized in a reporting period. As the actual number of equity instruments that would ultimately vest depends on whether the vesting conditions are met, the expense recognized at each reporting date should be based on the best estimate of the number of equity instruments expected to vest. At the vesting date, the entity shall revise the estimate to equal the number of equity instruments that ultimately vest. IFRS 2 stipulates after the vesting date, no further adjustment shall be made to total equity. This shall also apply to equity instruments that do not vest, for example, as a result of not meeting market-based performance condition. However, the entity may transfer any balance relating to the equity instruments that do not vest from other components of equity to retain earnings as a movement in reserve. This shall be disclosed in the statement of changes in equity and will have no impact on total equity. The final part of Lecture Series 23 on IFRS 2, Share-Based Payment, shall focus on cash-settled share-based payment.